Okay, we'll get started now. And for those who are coming late, they can just join in a bit later. But welcome everyone to the workshop 5 of the Financial Quotient series. So we're halfway there now. And for those who have been coming regularly to the webinars, I hope that you all have been learning a lot about personal finance. So for today, the topic is going to be about cash flow and budgeting. And once again, this is very important for personal finance, and Mr. Yong will be going over this topic today. And just before we get started, I want to preface once again, like every other workshop, we're going to have a little competition and quiz at the end where the top three will get prizes emailed to them. So make sure to stay till the end because you can both review what we went over in class today as well as just win a potential prize. So that's really fun. And lastly, I want to just say that for those who are comfortable with having their cameras open, I totally recommend you having it on if you're comfortable with it, because then you can increase interactivity and engagement for both Mr. Yong and yourself. So if you're comfortable with it, please have it open, but if you're not, that's okay as well. And that's it on my end, and I'm going to pass it on to Mr. Yong now. So I hope you all enjoy, and I'll see you again at the end for the competition.
Okay, thank you, Queenie. Hello, everyone. I see a lot of familiar name. Okay, Christina also. Yeah, I see you a few round already. Hello. Hello, everyone. Hi. So far, this is the 5th class, so I just want to ask every one of you, have you learned something from the previous few sessions? Learn something? Yeah, okay, thanks, Christina. Okay, how about others? Yeah, actually, if you're not comfortable, you can always use the chat box to communicate with me. Hi, Rick. How about others? Okay, yeah, I see Declan. Declan also come out for that. Okay, cool. So let's do some revisions and cover some of the part that I haven't covered in the past session, because previously I just put aside, but now I want to make sure that you all get important point. Okay, you get all the important point. So I will cover all together, make sure that you get all the idea. Okay, so let me share the slide. So still remember, this is the slide I shared with you, okay, in the previous class, because it's very important. It's based on the history statistic, based on the stock price in US. Okay, it's very important. So oh wait, let me okay. Let me set wait. Yeah, thanks. Thanks, Queenie. Yeah. Yeah. Okay, the spotlight. Okay. If you see from the chart, okay, this is the statistic data compounding for 320 years. Okay, 320 years. And yeah, from 1700 to 2020. So if the money that you have today in 1700, okay, in 1700 for $1, if you hold it, do nothing about it, then it will depreciate. Wait, where is my annotate? Okay. Yep. So it will become 0.02. $1. If you didn't do anything about it, you just put into your wallet, or maybe you just put under your pillow. So you didn't do anything about it. Because of the inflations, your purchasing power depreciate. The value of the $1 also depreciate. It fall under 0.02. You didn't do anything about it because of the inflation. Okay. Now, if you invest in stock, okay, if you invest in stock for 320 years, starting from 700,000, then it will become 4 billion. 4 billion. Invest in stock for this $1 after 320 years. Okay, but if you invest in bonds, then it will be 19 million. So from this statistic is based on the true story, based on the true statistic data compiled for the past 320 years. Okay, so this is the number. So this is a number tell us that you should actively invest so that you can ride on top of the inflations and grow your wealth. Okay, if you didn't do anything about it, it will depreciate over the year because of the inflations. So if you want to rise on the inflations, then you need to, or you want to outrun the inflation, you need to stay invest, actively invest, and invest wisely. Okay, so that is very important. Now, I want to share a video. Okay, a video about the credit. Okay, a video about credit. Wait. Okay. So, okay, so this is the video.
I want you to pay attention to credit. Credit is the most important part of the economy and probably the least understood. It's the most important part because it's the biggest and most volatile part. Just like buyers and sellers go to the market to make transactions, so do lenders and borrowers. Lenders usually want to make their money into more money, and borrowers usually want to buy something they can't afford, like a house or a car, or they want to invest in something like starting a business. Credit can help both lenders and borrowers get what they want. Borrowers promise to repay the amount they borrow, called principal, plus an additional amount, called interest. When interest rates are high, there is less borrowing because it's expensive. When interest rates are low, borrowing increases because it's cheaper. When borrowers promise to repay and lenders believe them, credit is created. Any two people can agree to create credit out of thin air. That seems simple enough, but credit is tricky because it has different names. As soon as credit is created, it immediately turns into debt. Debt is both an asset to the lender and a liability to the borrower. In the future, when the borrower repays the loan plus interest, the asset and the liability disappear and the transaction is settled. So why is credit so important? Because when a borrower receives credit, he is able to increase his spending. And remember, spending drives the economy. This is because one person's spending is another person's income. Think about it. Every dollar you spend, someone else earns, and every dollar you earn, someone else has spent. So when you spend more, someone else earns more. When someone's income rises, it makes lenders more willing to lend him money because now he's more worthy of credit. A credit-worthy borrower has two things, the ability to repay and collateral. Having a lot of income in relation to his debt gives him the ability to repay. In the event that he can't repay, he has valuable assets to use as collateral that can be sold. This makes lenders feel comfortable lending him money. So increased income allows increased borrowing, which allows increased spending. And since one person's spending is another person's income, this leads to more increased borrowing, and so on. This self-reinforcing pattern leads to economic growth and is why we have...
Okay, so this is the cycle. Because of the debt, because of the credit, then the economy will grow. Okay, the economy will grow because of this. So that is about the credit. So let me share the slide. Oh yeah, I need to, yeah, correct the slide. So that is very important aspect about the credit. So it's very important, okay? It's very important that we need money, we need bank as an intermediary. Okay, it's very important because without the bank as an intermediary, a lot of time, majority of the people, they are not actively invest their money. Okay, they just keep it, feel safe about it. Maybe they just keep it in their cabinet or in their wallet. They didn't use it. So it's not efficient at all. But with the bank as an intermediary, then you will see how it works. Okay, by just based on the 1,000 real money, the real money that you own is really that you earn from your salary or your income. That is called real money, the physical money that you own in your wallet. If you deposit into the bank as an intermediary for number one, okay, look at the number one. Mr. Bob deposit 1,000 into the Bank of America. So for this Bank of America, they need to maintain a minimum reserve. They cannot lend it out all, yeah? So bank is just a intermediary matching the one who have the money with the one who need the money. And they make the difference in between. Okay? They make the profit in between. So they just match the lender and the borrower. Okay? So they make the profit in between. So they need to maintain a minimum reserve of 1,000. And there's another guy, he want to buy an iPhone. iPhone is about 900, okay, in this scenario. Mr. Mark want to buy iPhone. He don't have the money. So he borrow 900 from the bank and pay Mr. Chris in cash. Okay, so now the Bank of America lend out 900 because he need to put 100 as a reserve. Okay, so he lent out 900 to Mr. Mark. So now Mr. Chris get the cash, get the money, is an earning. So he deposit in another bank. Number three, Mr. Chris deposit 900 in another bank called Wells Fargo. Okay, so in Wells Fargo, he need to reserve 10%. Actually, how much, what is the percentage for the reserve? It depends each country governor, the one that they set. Okay, if they want them to lend out more money, they will put a very minimum reserve so that they can lend out more money as much as you can to stimulate the economy. Because the more people borrow the money, then they will spend. No matter personal, individual, they will spend. They have more money. They will go and buy something, spending, buy, see the movie, enjoy the lifestyle, or even from the business perspective, I borrow the money, I will expand the factory, I hire more people, the economy will expand. Okay, that is how they stimulate the economy because it's very cheap to borrow money from the bank. Another indicator is interest. When the interest is low, they will borrow more. When the interest is high, they a bit reserved, like what the movie mentioned to you. Okay, now number four, because Wells Fargo also get the money deposit from the Mr. Chris, and they will reserve about 10% as a minimum reserve. They cannot lend out anything. They cannot lend out all together. They must have a reserve for people to take out the money. Okay. Now, so for number four, the Wells Fargo Bank, they will lend out about $810 to Miss Cindy. Okay, of course, the bank need to maintain a 90%. By just a simple indicator from the step 1, 2, 3, and 4, the real money is only 1,000. With the real money 1,000, but because the bank as an intermediary, he create an efficiency and productivity to the money that you own. You get interest because you deposit the money into the bank, and the bank will utilize the money that you put into the bank, and of course, they will pay you a very minimum interest. In the same time, they will lend out the money that you deposit to the one who need the money, who willing to pay higher interest. Okay, the interest that they pay you and the interest that they charge to the borrower, that is the difference between these two numbers, and that is the bank profit. So if you are a person based on this scenario, because of the bank as an intermediary, it really creates the efficiency and productivity to the money that you own. With just purely 1,000 of the real money, okay, let me annotate it. Wait. Okay. You look at the one that I highlight. So with just a 1,000 real money, it creates a $2,710 in deposit and $1,805 in debt. So that is called the power of credit or the power of leverage. It should properly manage. not until over gear, until a huge debt, until you cannot service. When the economy is not good, people feel reserved to borrow or to spend. Then it will create a negative cycle. Okay, just now is a positive cycle as per the video. Okay, but if the other way around, when the economy is not good, people will reluctant to spend. Then other people income will reduce. Then in cycle, then there will be the economy downturn, the other way around, the another cycle. Okay, so now here based on this case study also mentions that if you know how to invest, then you should not put the money into the bank. Because you can actively invest, actually you earn more. But if you are very conservative, if you put the money in the bank, at least to certain extent, you still can preserve your earning power, your spending power. Okay, if you put in the bank, earn the interest. The interest can cater the inflation, then you maintain your purchasing power. If you do nothing, it will depreciate your purchasing power. Even still $100, even still $1,000, the value actually already depreciate. Cannot buy many things already. Okay, whatever the big item that you buy in the one big trolley, 10 years down the road, the item getting lesser because things getting expensive because of the inflation. Okay, now give you another example. Okay, another example. This is the situations. This is the situations that in the global financial crisis happened in 2007 and 8. Okay, in 2007 and 8. Let me annotate it. So you see the leverage level, the how far they leverage the money that they have. In the normal situations is 22x. But during the global financial crisis, before the crash, they leverage up to 42 times. 42 times. So you see how extensive or intensive it is. Okay, so that's why it should be proper managed. Actually, credit is a good thing, but you must properly manage it. You must properly manage it. Don't do the extreme until it causes a monster and it will bring you into the problem. Okay, so that is very important. Okay, now I give you one. I want to have a discussion with you. You can use a chat box to communicate with me. Now, we talk about personal credit report, right? If you earn more, if you have a lot of asset, bank willing to lend money to you. Okay, so it based on the personal credit report means that you have a lot of asset, you have high income, then bank feels safe to lend money to you. Okay, because they want to fully utilize the money that you have. Okay, now for A and B, which person that bank like it very much? For person A, is a person that have a big cash. Okay, he always like to buy item with the cash and not having any credit card or any loan with the bank. Whereas number B, he always like to use credit card to buy big item, but he will pay the loan on time. On time. So which one you think that bank will willing to feel safe to lend to, A or B? Okay. Christina said B. Okay. Yeah. Declan says same. Andy say, Andy didn't mention anything. Alay say B. Luke say B. Aaron say B. Sophia also say B. Okay. Yeah, actually it's B. Why? Because you have a credit history with the bank. You have the history dealing with the bank and they know your payback experience. Means that they know that you are creditable. You borrow from the bank, you have the history record of paying the bill on time. and the bank will feel safe to lend to you for B. Okay, for A, yeah, you are to certain extent you right also, but I put but here. Yes, to certain extent that you are the person who have a the high pay, high salary, high income, and risk asset. But yes, you have all these kind of things, but I don't know what about your discipline of paying the debt. I'm not sure. So for for person A, if he want to get more loan from the bank, he need to maybe apply a credit card with the bank, or maybe apply a personal loan or student loan with the bank. At least bank know your history. Okay, that is called personal credit report. Okay, you totally don't have any history with the bank, then bank a bit reserved to lend you the money. Or at least they will ask you that, okay, since that you are cash rich, you are asset rich, then maybe I will want you to charge to the bank. Then I only lend you the money. We should utilize bank. Okay, we still can put money into the bank, but the money that we put into the bank are for liquidity purpose, are for emergency purpose. This is what I mentioned here in another slide. Still remember the financial stability pyramid. Okay, it's always step one for to have a stable in your finance. Actually, is your emergency fund. Emergency fund, 6 or 9 months. Okay, some people respond to me that 1 year or 2 years also okay. Some are very conservative. They feel safe that have more cash flow. Okay, you can put 1 year or 2 years, but you must put into the bank. Okay, when we talk about emergency fund, it should be able to allow you to convert into the cash very fast. Should be very liquid asset like fixed deposit, or maybe some very conservative investment that you can convert into the cash maybe within 1 week or 2 weeks. Okay, it must be a liquid asset. You're able to convert into the cash very fast. Okay, that is under the emergency fund. Okay, now I want you to utilize bank. Okay, even that in some of the concept I tell you don't put your money in the bank. If you are actively invest your money, let the money work hard for you, then you should not put all your money in the bank. Okay, because when the money that we put in the bank is for liquidity purpose, is for transactions, it's for payment that you want to utilize, because the bank have the network for you to reach the world, reach everyone, reach every individual in the country or even across the region or to the world. We utilize their network for payment purpose, for transaction purpose, and for liquidity purpose. If we need the money, we can take out. And if we need to pay someone, we can use the bank to pay them. So that is how we utilize, especially for emergency fund. Okay, now, and don't forget, another one you should utilize is credit card. Credit card is also a credit, okay, that you borrow from the bank. The bank that after study your financial positions and of course your credit record, they're willing to lend you the money. They give you, let's say, a credit card amount 10,000. So you can spend first, pay later. That is called credit card. Credit card is allow you to spend first, pay later. So based on this, you should use it wisely. Okay, if you use the credit card, but you pay according to the statement every month, you have the good credit. In the same time, you are manipulating the bank money for your liquidity. That is the smart way. You are utilize the bank money for your cash flow, for your liquidity, for your emergency support, together with the emergency fund that you have. So you use that too as a fundamental support to your financial position. Okay, now for second one, once you set out the fundamental level, then you go for the risk protections, which is the risk transfer. Transfer whatever that the risk that you are facing, no matter the asset that you own, and also the personal risk, health related, accident related, all to the insurance company. So when anything happen, emergency happen, you can claim from insurance company to cover your loss. Okay, then we go for the third level. We must go level by level, yeah. So the last stage is actively invest. Actively invest. Okay, actively invest. You see any investment from the bank, or you can choose any mutual fund, unit trust, or any stock that you like, but make sure that you equip yourself the fundamental knowledge before you start. Don't listen to any tips, any advice. But you can, for a person that they are not well versed on how to manage the money, then of course you can engage professional, licensed professional to invest on your behalf. And also, of course, if can, I will encourage, I think in US, in Canada, even in Malaysia, China depends. China not so in terms of property, but property is still one of the very good asset that you should own, especially for your first house. Okay, you can utilize the money from the bank to buy your first house. Okay, I even planning for my kids. I got 3 kids. So when they grow, I think after 18, I will utilize them to buy a first house, each of them. They don't know the knowledge, but I will guide them. Because I attend the training, you master the property part. So I know what to choose. All these, the bank, all these things. So make sure you learn. Don't simply do. Okay. I want to master property. I pay few thousand to learn from one expert. I want to learn crypto. I also spend few thousand to learn from one expert. Okay, crypto investment. I also want to learn business management, all these things. I also pay few thousand about it. Why? I want to master it. If you don't want to master it, you want to engage someone else, also can. Look for someone who you can trust and they are professional in that area. Let them help you. Okay, so that will be the one. Now, in the previous class, I talked about crypto, right? Okay, I talked about crypto. Anyone here invest in crypto? Or maybe your friend? Or maybe today just the first time you hear about crypto? No one. Okay, Lucas say I try in the simulator. Good, a good try though. Okay, so yeah, actually that is the trend. Okay, that is the trend that we cannot avoid. Okay, now previously I also mentioned in the slide that how we pay each others using crypto or using the e-wallet that we have or traditional bank. Okay, now when we talk about traditional financial system, the traditional bank that used to deal with, they are the intermediary. They are the intermediary. Okay, we need to pay this intermediary. We need to go through their screening, and if we go through multiple level intermediary, we need to pay them, and it will take time to process your transaction. They have a centralized system. If the centralized system down, then you cannot reach the system. All the information are recorded in a centralized system. And you need to use the intermediary. You need to pay them the money as a transaction fee. And they will, if you go for the region to region, country to country, it will take time and you go through multiple intermediary. And you still need to pay them. And you will expose your personal data to this multiple intermediary. It's like your agent. It's like the banker. It's like the branch. Okay? Now, the current trend that we are having now is called decentralized financial system, which is the one that we use is called Bitcoin. Bitcoin is using the decentralized financial system. It's a private system. It's a programming system. It's the peer-to-peer payment system without intermediary in between. You still pay a very minimum transaction cost, but the transactions is only will take a few minutes or few seconds. Depends how congested the network is. Okay, but for traditional system, if you want to pay anyone in the global, in other country, it will take few days. But with the decentralized financial system, no intermediary, cost is lower, and you will get the money in maybe few minutes or maybe half an hour or maybe 2 hours, depends how congested the network is. So it's very fast, no intermediary, direct pay each others. It's like now, any one of you, you are from Canada or US, if you want to pay me, I just show you the wallet and you can transfer 1 Bitcoin to me. So direct, without go through any intermediary. But if I want to pay some of you in Canada or US, then I will key in, you need to have the bank account in your country. And I will need to trigger the payment from my country. Then it will go through channel by channel, intermediary by intermediary until reaching your account. Both must have the account. And if you need to pay all these intermediary, and it will take few days, only you get the money. So that is the traditional financial system. Okay, so going forward, we will have 2 different systems, centralized and decentralized financial system. Okay, so that decentralized financial system actually is the peer-to-peer, is a community-driven system. Okay, that is what we use in the Bitcoin, Ethereum. Okay, so far until here, clear? Any question you want to ask before I go for the next topic? Okay, yeah, thanks, Christina. Okay, how about others? Any part you're not sure, I can explain again. Any part you don't understand, then I will explain again. If not, then I will go to the next new topic. So far, no, okay, if no, then I continue. The system, Declan say, the system safe? You mean the, okay. Okay, if we study the safety about these 2 systems, when we talk about centralized system like Facebook, like Microsoft, Gmail, Google, they are the centralized system. Means they have the centralized in their country. They have the server in their country in one particular location, storing all your data, all your information, all your email, all your activity, like let's say Facebook. If the server down, you cannot access to the Facebook, no updates. You cannot access to the email. Okay, and what about decentralized? Decentralized is like your BitTorrent. It's like your BitTorrent. Everyone can become a receiver. Everyone can become a giver. Okay, so if one node's down, the system still runs. The availability nearly 100%. Okay, and in terms of security, okay, now let's look for the US dollar that you have, and also the Bitcoin that you have. For US dollar, people will fake the US dollar. But for Bitcoin, you cannot fake Bitcoin. You cannot fake the Bitcoin out of thin air. Okay, it should be created by the system, the software, the program. You cannot simply create a fake Bitcoin. So actually, to a certain extent, it's safer. Okay, it's a virtual payment. It's a virtual currency that you can pay in the internet. Okay, until today, no one able to hack into the Bitcoin. Okay, but on and off, we will listen some hacker hack into the Citibank, hack into HSBC, on and off, yes, you will see it. Okay, you will hear about it. Okay, so to a certain extent, it's safer. Okay, until today. Okay. Okay, thanks, Declan. Okay, so now I want to cover a new topic. Yeah, I want to cover the new topic. Now, financial literacy is very important because a lot of time you take in the money. Okay, actually, I want to share this one in terms of financial literacy. Okay, so this is the one that I share. Maybe. Okay, actually, financial literacy is very important, but a lot of time, not many country, their education system teach them about it. They just teach them mathematics, but they didn't teach them how to manage their money. I think Japan is a country that teach their nation, their citizens about financial literacy. So they are very well versed how to protect their wealth, how to protect their risk transfer to the insurance company. Average in Japan, for each of the Japanese, average they buy about 7 to 8 insurance policy. Okay, because they live longer, they need a lot of protections from the insurance. And actually, this is some of the statistics, but it also applicable to some other country. They say a lot of time they are not financial resilience for retirement. They didn't plan at all, actually. Okay, if you ask them want to come out some money, even for 1,000, if you look at this statistic, they more than nearly half they cannot take out 1,000. Okay, and some of the people they totally not save any money at all. Whatever they earn, they spend it all, become zero. Then wait for another salary come in. Okay, that is not the right thing to do. Okay, and when they have the financial difficulty, then they will ask help from the government agency to help them restructure their debt, because they don't know that debt is like a knife lah. It's like the credit card that you own. You can cut, you can cook, you also can kill people. So you must handle it well. Okay, you must know how to manage it. And a lot of time, school is not teaching financial literacy, except the country that I know is Japan. Okay, so financial literacy is an essential survival skill. It's very important. Now, for the money that you earn, I think most of us are focused on how to earn a high salary and income, but they are not so care about the parts that after the money that you take back, have you done anything about it? Have you actively invest, grow your wealth, or at least leverage it? Okay, so for your active income, why we say active? Because if you stop working, no income. Because of the vacation, because of the sick, because of the handicap, because of the accident, you cannot work, then no income. Okay, so that is called active income. Okay, we must working towards to create your passive income. Okay, passive income is like the investment. No matter you on holiday, vacations, even you are sleeping, they create income for you. Okay, it's like your rental, your property, your stock investment. You invest in the country, in the company that keep on earn money for you and pay you in the interest or dividend. Okay, that is called investment. It's a passive income. Okay, now for your active income that you gain, actually is based on the time that you contribute, the skill that you have, the knowledge, and of course your experience that you have. This will create your earning power. Okay, you must maintain a high earning power so that you have the options. It's like a lot of time I always ask, why you want to study? What is the purpose for you to study? Okay, can you share with me why you go to school? Why you go to learn something? Why you go to the school? Any reason? Because my parents asked me to do so. Because it's compulsory. Government asks us to go to the school. It's compulsory. If you didn't go to the school, we will be penalized. Which one? Okay, Christina said, because I can learn more than I saw. Yeah. Okay, learning is very powerful because it will equal to your earning power. The more exposure, the more knowledge that you earn, your skill, your knowledge, your mindset, actually it will create your earning power. It will create your life also. So a lot of time, actually it's about choice, you know. Okay, it's about choice. If you build a very strong character, skill, personality, then you have the choice. Yeah, Ethan said develop more opportunity. Yeah, actually it's about choice. You go to school to learn, it's not because you want to earn high income. You go for the high pay income or high pay profession. No, not really. Not really. It's about build your characters, build a strong characters, personality, skill, mindset, experience, exposure, so that you have the choice. Some people don't have choice. If you are strong enough, you have choice. You have a very strong earning power, you have the choice. You have the choice to choose what profession you like, which give you a high income. You have the choice to go for whatever lifestyle you want, enjoy the lifestyle, to go to invest, go to enjoy the lifestyle, travel, choose the profession, choose the lifestyle, choose the career, choose the business, choose the lifestyle that you want. Okay, even choose the university or choose the school that you want, even choose the profession, career, whatever courses that you want, because you are the top performer in your class, then you have the option, you have the choice. That is very important. Okay, so whatever you learn today is build your ability so that you have the choice to choose. And a lot of people, if they didn't build strong enough for their personality, skill, mindset, exposure, they don't have choice. They have limited choice ahead of them. Then they cannot do anything about it. And a lot of time when they don't have any choice, they will blame everyone, blame their school, blame their government, blame people around them, blame their parents, everything. They will blame everyone. Okay? So I also tell my children, I say, now I give a very tough request, expectation on you. Because if you build your earning power very strong, then you can go for whatever lifestyle you want. Then I'm not worried about you. Okay? So Christina says, school provide an opportunity for students to learn and gain knowledge from experts from various subjects. This knowledge can help students develop critical thinking skill. Yes, think. Okay, from different perspective. Okay, sometimes the more you talk with people, you will get a different perspective. So that's why learn not only from school, learn not only from class, learn not only from book. There are a lot of things you talk with other people, you also learn. Do you know that when I travel around with the Grab, Uber, taxi, I talk with the driver. The driver is come from different background experience. The more you talk with them, you get exposure to different industry that you are not in. And they will share a lot of life experience, story with you, and it will create your experience, your exposure. Okay, the problem solving skill, overall knowledge. Yes, knowledge is very powerful. It can change a person's life. That's why I'm in this training education industry. Why? Because I believe education's knowledge can change a person's life. So now you're lucky, you are invest the money, invest your time in these sessions is to build your ability, build your knowledge, build your talent, build your exposure. And whatever I share with you, I'm not share the conventional only. I will share unconventional perspective also to you. It's like a lot of people say put my money in the bank. Then I will give you another aspect that don't put money in the bank. So at least you will go and think why. Okay, now in the passive income, for active income, you work hard for money. You sacrifice your time, your knowledge, your effort. Some even sacrifice their health. Okay, now for passive income, it's the money work for you. Then there are a category of people, they totally, even they go and learn, they still cannot master it well, or maybe they don't have time for it. Then maybe they can ask for professional help. Okay, there's someone that you can trust and they are professional, licensed professional. Ask them to help you if you really not. Or maybe in the family, maybe the partner that you choose, maybe he's more well-versed in financial literacy. Then you ask your partner to manage for you. Or maybe your sibling who really well-versed in this financial, in certain investment. Even for myself, I cannot know every investment. But few investment is considered okay. If I want to involve in other investment, which is I'm not very familiar, then I will ask help from professionals who are very well-versed, experienced in that particular field. Okay, so have this kind of mindset. Don't everything put inside you. Everything you do yourself, not really. You have limited time, 24 times 7. Your hour is 24 hours. Everyone is equal. So in some of the professional or some area which you are not familiar, ask for help. Don't shy to ask for help. Okay, ask for who. Don't always ask for how. How means you fix yourself, take time. But you ask who, pay some fee for people to fix your problem. Okay, they are professional. Okay, so that is very important. Now, in the Global Wealth Pyramid 2022, okay, 1.1%, the top pyramid, the one at the top is only 1.1%, but they are controlling about 45.8%. Why these people rich, very rich and getting richer? What is the difference between the rich and the poor? The big difference. What do you think? You can type in the chat box. Why the rich people get richer? Okay, yeah, passive income. Now, tell you what, let's say if you build a passive income, let's say I type in the chat box. Let's say if every month you spend, let's say 3,000 per month. This is your money spending. Let's say you spend 3,000 per month, every month. If the passive income that you develop able to give you a dividends or return or interest, 3,000 per month, then you are financial free. So that is the definitions of financial free. Financial free means even you are not working, your investment or return, interest or dividend able to cover your expenses, then you're financial free. Okay, everyone number is different. Your number is different from my number because we spend different. I spend, my amount is different. Maybe for me in Malaysia, I spend about 10,000 per month. Then for you, maybe you're still small, you still in the primary school or maybe in the secondary school, maybe every month you spend lesser, but most of it covered by your parents. Your parents will manage it. Okay, so you spend lesser. But if you have a family like me, then maybe about 10,000 per month, then I need to have a bigger chunk of the investment who can give me 10,000 per month. Then I'm financial free. Since that I'm a financial free, then I can do whatever thing I want. Enjoy the lifestyle, do some volunteer, contribute back to the community. Possible, right? So in the daily expenses, okay, actually cash flow is very important. Cash flow is always the big and important matter in financial planning. So we must know where the money come in the form of income or salary and out in the form of expenses, pay whatever spending, whatever item that you will purchase. Okay, so now cash flow management is very important we must know where the money come in and where the money out. Okay, then we know how to adjust. Let's say this month I have a negative cash flow. After I take in the salary, the income, I pay all the spending, school fee, whatever, internet fee, broadband fee, handphone fee, whatever. After I pay, I cannot pay off all. It becomes negative. Some of it I need to pay with credit card. So I become negative cash flow. If negative cash flow, then I will go back to study. Why this month I have? Is it because I have lesser income? Or because this month I spend more? Okay, so it's very important to have a positive cash flow. Cash flow is very important, no matter personal or company. Okay, for a personal, if you are the top earner, top performer, if you have the negative cash flow, you still will bankrupt. You still will bankrupt. For a company also, even you are the top earning company, but if you have negative cash flow, you still will bankrupt. So cash flow is very, very, very important. If you have negative cash flow, then you go back to study. Why? Is it because income lesser or I spend more? What kind of item I spend more? Next time be extra careful. So that is how we manage your cash flow. Make sure it's in the positive. If some months negative still okay, but if constantly negative, be extra careful. It will bring you into the trouble in long run, no matter for your personal finance or your company finance. Okay? So after you use your income, deduct your spending, your bills, then that is your saving or positive cash flow. Now, you see on this leaking bucket, okay? So whatever inside the bucket actually is your wealth, your money, your asset. It comes from the salary, bonus, businesses, income, investment return. And whatever leaking out, the water leaking out is your spending. It can be in the form of emergency spending, daily spending like your food, your drink, whatever, school fee, tuition fee. And sometimes you go and watch movie, cinema, vacation, self-rewarding, any fraud, any mistake, any investment losses, all will leak out. And your asset will depreciate or reduce in terms of total amount. So you must control. So the smart tips here is control the leak and add more source of income. If can, the passive income. Okay, so there is a quote saying you never fill a leaking bucket. Okay, because it keep on flowing out. So that's why you must properly control it. Okay, so that you will not overrun. Still can leaking out, but control, make it smaller. Okay, then you can grow your wealth. If not, no, it really will not help. Still, anyone know what is the reason for this Titanic sink? What is the reason? This Titanic ship, actually, that time is the biggest during that time. Yeah, ice pack. Yes, ice pack. Why? Because it crashed into the ice pack and there is a one small hole, then it become bigger. And the whole ship collapsed, sink into the ocean. So it's like the money that you have, the wealth. You must control the leak. Because the leak, the hole will be from small become bigger. And all your money will disappear. So even you are very wealthy like this Titanic ship, you earn a lot of money, but you didn't control your spending, everything becomes zero. They are the person who earn a lot every month, but they every month also become zero. Why? They don't know where the money is spent. They don't know where they spend the money. It's like this leaking bucket. So you must properly manage it. so that you can save some money for actively invest. Whatever money that you take in, you must actively grow it. Okay, so that is very important. So until here, any question? So far, any question until now? So it's very important. Remember the key point here. Manage cash flow is very important, no matter personal or company. Make sure it's positive. For 1 day, 1 month is okay. 1 month, 2 months is okay, but long term is not. You will bankrupt if you have a negative cash flow, no matter personal or company. Even you are the top performer, even you are the top earner, even you are top earning company, the same. So make sure that you are not fall into this Titanic. Earn a lot of money, but it still will crash, it still will sink because of the small hole. Small hole become big hole, and the whole ship collapse. Your finance also the same. So the tips is control the leak, increase more source of income, increase your earning power. So whatever you learn today actually is to ready yourself, improve your earning power so that you are ready for your career or your business in the future. Okay, so if you don't have any question, I pass to Queenie.
Okay, thank you so much, Mr. Yong. And I'm just going to share my screen to start the Kahoot.
Yeah, can.
Yeah. So if you guys just go to kahoot.it and use this game pit, you can join the Kahoot. And I'll just wait like 1 or 2 minutes for everyone to join. Okay, is anyone still trying to join? If not, I'm okay. Wait. Okay. I think we'll get started now. The first question is, what should you ideally do to ride on top of inflation? Yep. Okay, so most of you got this one correct. So it's to actively invest, because remember that's a sort of passive income when you invest your money because you can kind of avoid inflation that way. What does it mean to buy an item on credit? Oops. Okay, yeah, sorry. I think I made a mistake in the answer choices. I think this one was supposed to be a different one. But yeah, for those who picked blue, good job. And also for those who picked green as well. So it's borrowing money to make a purchase. That's what you do when it's on credit. So remember when you have that exchange with the bank, it's credit and debit. And that's usually what it means when you buy an item on credit. So then the bank will like hold the money and then you have to like pay for it later. Sorry about that, everyone. So what is a likely consequence of not having any credit history? Yep. Okay. So most of you guys picked green. So if you don't have a good credit history, then it's likely you will not be able to obtain a loan or a credit card because they want, remember when we did the comparison between A and B, they would rather like give a loan out to someone who has a good credit history because they know they can manage their money and that they can pay back with the correct amount of interest. So yeah, that's why it's green. Oh, it changed. Now Ethan is first. So according to the personal finance stability pyramid, what should be your first priority in financial planning? A hint is by looking at the image. Yeah. Oh, okay. So it's blue, so it's setting up an emergency fund. So the image is no longer here, but before they had the image of the pyramid, it was first save and invest, and then risk and insurance, and then lastly, it was the emergency fund. So you should prioritize this when you're doing financial planning because just in case something happens, you still have that extra amount of money set aside. So yeah, that's why it will be setting up an emergency fund. What could be a consequence of excessive leveraging borrowing as indicated in the document? Yeah, okay. So for this, it'll be potential bankruptcy and economic downturns. So if you don't manage your finances and you just do too much leveraging and borrowing from the bank, it's also not too good because you could potentially go into bankruptcy. Oh, Marissa's first now. Okay, this one's a true or false. So decentralized financial system has an intermediary agent in between. Oh, okay. So this one is false. So I think half and half. So half did true, half did false. So in this case, remember decentralized financial system, it's when it's like Bitcoin. So you do it technically online and you don't have a bank. So an intermediary or agent is like the bank who holds on to the money and you have to like transfer money through the bank. And if you have a so that would be centralized and decentralized would be Bitcoin or like online transfers. Depending on salary and income is active income. Yeah, okay, most of you got this one right. So this one is true. So remember, there's active income and passive income. So active income, you're depending on like a normal wage, so it's salary and income, while passive income is through investment. So the difference is active, you're kind of working for money and spending your time working for it, while passive, the money is technically working for you because you don't have to work on an hourly basis. Okay, Marissa's still first. Believe this is the last question. Yeah, so it's double points. So what should you do if you are personally stuck in a financial crisis? Yeah, okay. So this one would be asking for help for and advice from a professional, while asking for help and advice from like your family or friends could be beneficial. They aren't a professional and they might get false information. So it's best to seek advice from a professional because they will probably know the information the best. So yeah, and good job, everyone. Let's look at the podium now. Oh, we have Andi again from last week as well. And Ethan, congrats. And I believe Marissa is first. Okay, yay. So I think we have the same winners from last week. And then Arian and Julia are runner-ups. And good job for everyone else who participated. And so I guess can the winners just open up their camera just to confirm that you guys were playing and also just send the email? I don't believe I have Ethan's email, but I have Annie's and Marissa's because they won the previous ones. So if that's okay. Hi, Ethan. Sorry. Could you just please place your email into the chat? Okay, thank you so much. And I also have Annie and Marissa's email already. So the little prize will be emailed to you shortly after this workshop. And Mr. Yong, do you have anything else to add?
No. So congratulations, Christina, Ethan, and also another one is Andi. Yeah, three of
Yeah.
them. Congratulations.
Congrats to Marissa, Ethan, and Andy. And so for next week, we won't have a workshop. We'll take a pause for next week due to personal reasons, but then we'll have a workshop next week. So that'll be workshop 6. So I hope to see many of you guys come again, and that'll be the end of today's workshop. Thank you so much, everyone, for coming today, and I hope you all enjoyed. See you
Yeah, we
guys.
take one photo. We take
Oh
one.
yeah. Oh, sorry. Please stay. Oh, yeah. If anyone can open up their camera so we can take a group photo. If you're uncomfortable with that, that's totally fine as well. But it's highly recommended. Okay. Guess we only have one person. Hello. Hi.
Elvin.
Evan.
Hi, look. Hi.
Hi. Okay. I'll go 1, 2, 3. Okay. 1, 2, 3. Okay, great. Thank you guys so much for coming today. See you guys soon. Bye.
Bye-bye.
Thank you.